Paul, I wonder what you take away from this week in terms of the backdrop for risk assets, because Warsh was a little more dovish than expected. The payrolls number was weaker than expected, and we pushed out expectations for a Fed rate hike.
Yeah, so if you're Kevin Warsh, I think you're very happy with the way that things are going, Anna, this morning. He came into the Fed as chairman, setting out a stall that they wanted to bring down inflation. The market got a little bit worried that they were going to raise interest rates, but it did bring down the inflation expectations. It brought down yields at the back end of the yield curve. Now what we're seeing is this idea that with a softer jobs data and with inflation cooling because of the oil prices dropping again, the market is pricing out the need for the Fed to act with any urgency in terms of raising interest rates. I think for this month, we're now just priced at a 20% chance that the Fed will move. So that's kind of cooling down markets, and it's one of those moments where the reducing the bets on Fed hiking is being taken as a sort of risk-on signal for the rest of the markets. We've got a weak dollar, got stronger Asia FX, stronger commodities FX, and equities market is having a better time of it as well.
Paul, how are those factors tying into the Asian equity session today?
Yeah, so I think people taking it as a genuine positive. And so particularly if you look at the yen, which had been under quite a lot of pressure, as we know, all of a sudden we've got the dollar softening a little bit. It's allowing the yen to rally. Likewise, some of the other Asian currencies that have been under pressure, like the won. And then the tech has been all over the shop this week in Asia, but it's ending the week on a pretty positive note in South Korea in particular. We've got a rally going on. We've got talk of a deal between Anthropic and Samsung. That's helping things as well. SK Hynix had its worst day yesterday since November 2008. Is back up more than 10% today. So the market is certainly ending the week on a more positive vibe than it's had at various points during the last 5 days of trading.
And Paul, help us deep dive into what's going on in South Korea, because this is really interesting. The stock market has been something of a global story for a long time, but it's not taken the currency with it. The won has weakened, partly due to people not wanting too much exposure, I think, to South Korea overall. Now we're about to see a period where we get 24-hour trading in the won, and we're also going to see SK Hynix go to the US to try and raise some money. So talk us through the dynamics, how this is all playing out.
Yeah, there's a lot to unpack there, isn't there, Anna? So the big picture is that we're going to begin 24-hour trading from Monday. It's a big deal for Korea because over the history of time in the FX market, it got very badly burned and scarred by the Asia FX crisis, which meant that it kept trading under very close wraps for quite a long period of time. Now it's opening up because its markets are maturing, and also it wants to win this developed market status. And in order to do that, having around-the-clock FX trading is a big part of it. Talking about valuations and levels, yes, I think that you're right. International money has been coming out of South Korea just because the rally in the equities market has been so gigantic that people have been hitting the limits on how much they're able to hold. So they've had to take some money out. It doesn't reduce the sort of overall size of their holdings, but it does free up some cash for them. Boosting the won today, we've got news that maybe some funds are coming back from the SK Hynix fundraise in the US. So a bit of a rally for the end of the week.